Early on in my career, I had the opportunity to work directly for a CFO, helping to build out the financial model for a company I was working for. The position was new to me and was a departure from what I was doing previously, so I was already outside of my comfort zone. Little did I know how outside the comfort zone I was going to be pushed. Within 5 minutes of sitting down with the CFO and VP of Finance, I could feel the sweat dripping down my back. Here they both were, throwing around terms like top line and cash flow and EBITDA, and I didn't understand a single thing. It was a foreign language to me. Now these days I'm comfortable with the terms and how the financial statements are linked and how they illustrate the story of the company. Now here are 6 things that helped me bridge the gap from being a financial statement novice to being able to teach financial acumen. Number 1, get the context. I forget who said it, but I've totally stole it, so sorry to whoever is the source. They said, content without context is catastrophic. Get the context of the financials. Are we looking at annual, quarter, or even monthly financials? What are we using them for? Who are we talking to? What's going on in the economy and the industry? What is the company's strategy? It's important to know the market forces to determine how well the company is doing, where it wants to go, and how it wants to get there. Number 2, get comfortable with common metrics. Every industry has a common set of metrics that the market looks at to assess performance. Pretty much all companies look at revenue, but then they branch off from there. Some want to look at gross profit, others operating income, some don't even have either and look at pre-tax earnings, while others take EBITDA as their preferred metric. Get to know what's common in your industry and what's common for your company. 3, know the calculations. Calculations are important to know because they tell you the performance you're measuring and what the components are. For example, managing return on sales, which is operating profit divided by revenue, means that I should focus on increasing operating profit relative to the sales we're making. Number 4, look at benchmarks. Benchmarking is really just comparing metrics across the landscape. Most of the time we compare financial performance to our peers within the industry, but I would expand that. We should also compare performance to prior periods, to our plans and goals, to our strategy. Profit margins are a great example. Most of the time, companies that can distinguish their product or service have higher margins. So if our strategy is to distinguish our product portfolio through innovation, I would expect to see us earn higher margins than our peers. Furthermore, if we're going through a transitional period trying to build that innovation, I would look at the margin trends to make sure our margins are increasing over time. Both of those benchmarks would help me determine if we're executing on our strategy. 5, identify the expected trends. Like I've mentioned previously, the environment in which we operate and our strategic approach to the market are both going to determine what our financial goals are. In other words, they set our expectations. So take Amazon, for example. For 19 years, Jeff Bezos said that they were in growth mode, plowing all of their earnings back into growth through innovation and product development. How did that set expectations? It means I would have expected to see revenue growth, and since they were in growth mode, I would expect to see revenue growing faster than their profits. In fact, they didn't record a profit for 19 years. Finally, manage the levers to make an impact. If you look at the calculation of the metric, you can often figure out what the levers could be. Take, for example, gross profit. Gross profit equals revenue minus cost of goods sold. If you want to increase gross profit, I can sell more by leveraging volume and/or price and decrease the cost of goods sold. For me, financial acumen isn't just reading a profit and loss statement. It's also about peeking around the corner to anticipate the decisions you need to make. As you get the context of financial performance, you'll get better at predicting what's coming next. The common metrics with their calculations, benchmarks, and expected trends will show you what success could look like. Then knowing all of that and the levers to impact decisions, that all lets you make prudent and effective decisions that align with the industry trends, align with your company's strategy, and have the intended positive impact. And knowing all that is just good business and financial acumen.